Hello again, everyone. It's Vince from TradingWinds.com, and this is our update for July 21st, 2024. Just want to take a quick look at how the markets finished off on Friday and then talk about a simple uh, way to read price action that will help you stay on the right side of the market. Let's have a look at these charts. So we'll start with the Dow. It was down almost 400 points on Friday. Now, the important thing here is that this was in a channel, broke out. Now it's coming back for the retest. Will it hold this area that should act as support? What we'd like to see is it bounce from here. If it doesn't and breaks through, more importantly, takes out a prior low, then we know we've got something much different to deal with. But if it just bounces off here, makes a run back for the highs, we know which way this is going. The S&P 500 down 41 points. Similar. Here's an example where it does not hold the 20. It broke through. That's red flag number one. If it were to break this low, then we know we've got something different. Okay. If it turns before it breaks that low, starts making its way back for this high, again, we know that is nothing more than a continuation of this move. The NASDAQ down 186. Now, this one is a little more interesting. Not only did it not hold that 20, now here we are right at this prior low. I mean, it dipped below there during the day, but it closed right at it. So in all likelihood, it will push through, which means we're dealing with something much different. But again, we have to wait and see what Monday brings. But that's definitely something to keep an eye on. And the Russell down about 15 points. This one's a little different, more like the Dow, coming back to retest this breakout level. If it holds and bounces, great. We know there's going to be a continuation of this move. If it breaks below, we're dealing with something much different. So let me go to the chart of Bitcoin and explain this to you in a little more detail with Bitcoin in this recent move. What you want to look for are the pivots, meaning these turning points. Like this is a pivot high, this is a pivot low, then a pivot high, then a pivot low. And so on your way up, what you want to see is higher highs, meaning from one pivot high to another, prices increasing, then higher lows from one pivot low to the next, prices increasing. Once you see that, you know you have an uptrend and vice versa for a downtrend. But the way you want to play it and understand whether this is a continuation or this trend is going to continue or whether it's going to turn is this way. So once we make a lower high and then we take out a low and make a lower low, you know we're pretty much headed lower, right? Now, let's focus on this low and this high here, okay? If you break that low, you know, since we have lower highs, lower lows, that you're bound to continue going lower. There will be pullbacks throughout that trend. When it pulls back, all you want to make sure of is that it does not take out the prior high. It can pull back a little, it can pull back a little more significantly, but as long as it does not take out that prior high, you know we're likely to continue going lower. Okay. Now, here in this example, it does not take out that high. So what happens? It turns back around, but it does take out that low. What does that mean? It should be going lower. All right. Now, again, sometimes it's a small move, sometimes it's a more significant move. There's going to be, back and forth, zigzag along the way. It's rare that you get one straight line. So in this case, we pull back again. Do we take out the prior high here? No, we don't. What do? We turn around. We definitely take out that low. What happens? We go lower, right? Then we pull back again. Does this low take out the prior high? This high take out the prior high? No, it does not. In fact, we turn around, we take out the low again. What happens? We go lower. This is normal price action. This is what you should see during a sustained trend. Now, when it pulls back, what happens? It does not hold the 20, meaning it does not bounce off like it did here. It breaks through. That's red flag number one. But what we're really looking for is for that pivot. In this case, it does take out the higher pivot. Now we know that we're dealing with something much different. And then we get a pullback here on this low. Not only does it bounce right off that prior high, which is something to keep an eye out for, but does it take out that prior low? No, it doesn't. In fact, it turns around and takes out the prior high, and off it goes. So now we have a situation where we have higher lows, higher highs, and that's all we're looking for. Is we mark this low, as long as it doesn't take out that low, we know we're going to keep going higher. And every prior high it takes out, it should make another move higher. And so that's just a quick, easy way to make sure that you're on the right side of the market. All right. Enjoy the rest of your weekend, and we'll see you on our next update. Take care.